All right, welcome everybody. Let's let the last two people in, and it is May 6th. So yesterday's Cinco de Mayo. Hopefully you all had a good time. Day before was May the 4th. So May the 4th be with you. Now May 6th, there's really just nothing today. So we're just back in the normal market swings up and down. But like I said, we're going to cover today short-term trading and short-term income trades. Now, we could probably do this every day for the next couple weeks and not cover all the different permutations of trades that we can put on. And I'm happy to cover specifics if you want, but what I'm going to focus on today more than anything is we'll talk a little bit about the poor man's covered call. We've been doing that a lot lately, so I really don't want to focus too much on that, but I will if you have questions. So put those in chat. We're going to talk about credit spreads. So we'll talk about credit spreads. We're also going to look at the covered strangle and how we use that and how really that I think it dives into the wheel a bit. We can talk a little bit about the wheel strategy. We may not get through all of this stuff today, and we'll talk about some strangles as well out there. So lots of different trade opportunities. We can also, if you want, it's not the purpose of Income Navigator, but we can also talk about how I choose long call setups, short term swing trade type things. Again, this is not the primary goal of Income Navigator. We do have Active Trader. That service is more for that stuff on stocks and swing trading, but it's all the same to me if we're generating income. And I'm looking for just ways to use to generate income without getting into longer term holes. And we blur the lines here sometimes between investing and trading, where a lot of my trades, especially, but a lot of trades are typically longer in nature. They may be, a 90-day strangle. It was a 120-day 112. It might be 120-day naked puts on ES or something along those lines. Excuse me, I have a little bit of a cold. I think an Uber driver in New York City gave me something, who knows what, but he was hacking away in a car, so that was tremendous to get that. So a gift from New York City keeps giving. But let's keep going. So a lot of these different trade opportunities that come out there, but I posted something in the Discord. If you all haven't had a chance to read it, again, it's up to you, but just how I evolved or how I've changed since really August of last year and April of this year, how it's changed my trading to a small extent. And for the most part, still doing a lot of the same exact things. We've made some tweaks. We've tried some different things, found out what some things that may work, may not work. But I think the goal for me was laddered trades are a potential problem, especially if you're using ES or far out of the money puts on things. You've got potential tail risk problems that, while extraordinarily rare, I mean, I went 4 years without a single one of these events, and then we had two unique events within a 6 month time frame, or a little 8 month time frame. We might go now 10 more years before another one of these events. However, it feels to me like more and more unique events are coming up with the way this market is structured and handling things. So uh, we want to be a little bit more cautious. So I'm still doing the 112 trades, but I've gone to the calendarized version, which I like very, very, very much. It's my favorite core trade. It's handled this year very well. We're up on the year. If you look at we're up over 6,000, almost $7,000 this year. We're about to close some more. So we'll be up eight to $10,000 in those this year. So it's one of the most profitable trades that I do, and it handled April with very little issues. I like it, and I don't have a lot of laddered trades on, which is I think is what I like the most about it. All right. So that being said, we've implemented some of the poor men covered calls. What those are still longer term because they're owning the leap long term, but we're selling short term calls against it. And I think that's been a great strategy because number one, the long calls that we buy, the leaps that we buy those are positive Vega trades. So we've really reduced the Vega risk in this account. In fact, if I'm looking right now today, the Vega in this account is actually minus 400. Okay, that's it. Okay, even though I have futures on everywhere in this account, my Vega is almost at zero. So I don't have a lot of Vega risk anymore, the way at least the portfolio is constructed. And I like that trade. And what I'm trying to do now is because I still don't love this market. And because I don't love the market, I'm sticking to a lot of shorter term trades. I haven't done any zero DTE this week just because I've been very busy. But if I can, I would do those. That's the ultimate in short term trades, but it's also fairly high risk and it's picking up those pennies in front of the steamroller. But if you've got the strategy down, I think for the most part you can do well over time, but you got to stay consistent. One loss could wipe out several wins, but you've got to just keep going with it. And when volatility in VIX has been up around this, 30 mark, that was just a gift. Uh, for zero DTE. It made it so nice and easy to do. It's still elevated, so VIX is what, 24 and a change today. Not too bad. At Time Merchant, yes, the fact that we've seen two volatility events within the past year leads me to believe these type of events will become more common in the future, 100%. So that's why pretty much my feeling on that is that the way this market is structured and set up, I think we're going to see more of these events. What's triggering them? Not 100% sure, but we are seeing more volatility style events, stuff that we haven't seen for a decade. And even back then, it was mostly the market crash, not a volatility event. So now we're seeing more volatility events. Maybe it's because there's more futures, maybe there's more zero DTE, maybe there's more options trading. Don't know the answer to that. Maybe there's just more retail trading going on. Not 100% sure what the main cause of all of that is, but uh, something we're going to be cognizant of. So anyway, there's my long story. You can read the post that I have on how I've evolved. We got rid of the perpetual vol hedge that did not perform well, but we didn't have the same situation we had in August. But because I changed the 112 to the 112C, I don't know that I really need those anymore. I'm okay with where I am on those trades. So I like the setups, but we're doing a lot more shorter term trading. So a little bit more shorter term trading. It's more active, less of the, sit back, relax, and all-time highs every single day that we had been experiencing here for years and years and years. Now we're back to a little bit more of, putting on some more specific trades. So let's just jump into it. And ratio spread hedges, I still like them. Do I think they're the end-all, be-all, cure-all of anything? Not really, but I do have them on, and I have one. And I modeled my portfolio yesterday. So even though they're very low delta long puts, 20 of them that essentially only cost me a couple $100, not a bad thing to have in the case of some sort of either a black swan or a volatility event, or in just a big sell-off. They'll pay something. And they don't really hurt you when they're in the ratio spreads stage, but as soon as the shorts come off and they're all longs, it can only really benefit you. So those are sticking, at least for now. And because we're doing a lot of other trade types, I'm not laddering as much. I don't feel I need as much of the hedging as I did because you hedge what needs to be hedged, and you really had to hedge for volatility when you were laddering trades. Now that I'm not laddering so many trades on and don't have that risk is essentially disappeared for the most part. So I don't find as big of a need to hedge necessarily. All right. So that doesn't mean no hedges, doesn't mean doing anything. It just means understand your trade mix and what you have. All right. Let me share a screen and get into some trade opportunities, and I'll get off videos so we can clean up the screen. If you have stuff that you want to take a look at or certain trade types, perfect. We'll be happy to do that. And what I want to start with is we talked about poor man's covered calls, credit spreads, covered strangles, the wheel, things like that. These are all shorter term trade opportunities. And I think to me, it's not, hey, pick an underlying and then pick a strategy. But essentially, that's what's happening is I sift through most of my trades, which I do with you guys pretty much every week. And hey, we're looking at ES on the day. This is a 1 hour chart. I don't want 1 hour, so let's get off of this thing. We're going to go to a daily chart. Okay, I've got a daily chart and I've also got a 4 hour chart. And I'm going to tell you what the difference is and why I use one over the other. And then there's kind of the standard, the weekly, daily, other charts that I use 90% of the time when I'm talking with you guys. But we're going to stick to just a daily chart here for a little bit. And let's start with, well, we could start with ES. And I want to talk briefly about some technical analysis, but how does technical analysis impact each of the different trades that we could have on? And let's actually close some things off of here. What do we see when we're looking at ES right now? Okay, we had essentially maybe a double bottom here on the daily, broke the neckline, ran up. That's all good. This neckline can go away. And now we're sitting on more or less this nice uptrend. Okay. Higher high, higher low, higher highs, and now we'll see where we come down on these things. I'm going to remove pretty much everything else off of the screen. The other thing that's interesting is to look at this anchored VWAP, which is the white line here. This is not really part of the main technical analysis, but the fact of the matter is with this anchored VWAP, it was a little bit of resistance per, bang, failed, bang, failed, bang, didn't make it, finally broke through, and now maybe we came down and we'll use it as a potential support level as well. So, what trades do we have in our arsenal that would look good here? And this is really what I do with you guys every single Tuesday, Thursday, is we look at everything and determine what trade strategies do we have. And I think right now you've got potentially some more pullback to go here. And I've got the squeeze on because when people have asked about the squeeze, it's not something I'm going to spend a lot of time on today. It's almost its own little animal. But if you look at the squeeze down here, 1, 2, 3, 4, 5, 6, 7, 8. So 8 squeeze is triggered for 8 sessions, positive, and normally it lasts about 8 candles, 8 blocks, what have you, 8 days, depending on your uh, time frame that you're looking at. But that usually starts to fade. So once we get to about 8 to the down, okay, 8 to the upside, either way, 8 is usually where the squeeze starts to fade and momentum starts to fall. So we could get a little bit of a pullback here. So what are trades that we can do? And I want to go through some of those trades. So is a credit spread a great setup here? Well, to me, the best setup for a credit spread, and if you look at my trade plan, when I talk about credit spread trades, I would love a trending chart, okay, where MACD potentially is rising. Well, MACD is rising, but now it's starting to fall over. But trending chart is the 21 over the 50. It's not, but we are trending up. So not everything here is hitting. Is the PSAR in the direction of the trend? Yes, it is. This is a bullish PSAR. Is RSI rising? Oversold. Where is that? So we're looking at a couple things. So the first thing for me is looking at any kind of support resistance zones, and those are easy to identify for me based upon previous pivot levels. So if this was a pivot level high here, then this eventually is a bit of a resistance level. A previous pivot point low, which could be any of these in here, these are potential support levels. So I've got a support level down here, a support level here. Depending on the time frame, I could go to a shorter time frame. You might even have one that was this was a pivot low and then a pivot high in here. We could probably draw this thing across. Not a great exact level, but a pivot low, another pivot low, a resistance level. Okay, then it broke it. This could be a pretty solid resistance level here. So if we were going to trade something along the lines of you know, what's this, a credit spread, I don't want to, on an uptrending stock, and if we look at the weekly, we're still in we broke the downtrend. Its weekly is trending up, so I really don't want to be putting on a call credit spread when the longer term time frame is pretty positive. And this is how I do zero DTE. There is no difference. I look at the longer term time frame. What is it? Well, MACD is coming off of lows and rising. RSI is rising. Stochastic momentum is rising, and PSAR flipped positive today, if that matters. Okay. This is a really good setup for, being fairly long. Okay. So the trend is long on the longer term, which is the weekly. Then I look at the daily to see, is there a good entry point? Well, a good entry point for me would be, do we come down and touch a Bollinger Band or something along those lines? We're not at a top or a bottom. We are closer to a top Bollinger Band. We almost hit it the other day, which means, maybe, you've got to wait till we come down a little bit farther if you want to put on a better swing style trade in here. I would love to see us come down, closer, come down a bit more. So if on ES, I'd like to come down and retest this 55.28 level potentially. That's where the 21 EMA is. That's where this trend line is. This would be a really good level, I think, to put on a call credit spread or a put credit spread. And then what do we do with those put credit spreads? Typically, if I'm doing short term, like 30 DTE, I'd go somewhere around 12 to 14, 15 delta, something in that line. Right. So if I was going to trade ES with a credit spread, I'd like a bit of a pullback, and then we'll see. So it's not really setting up good for a credit spread. Is it setting up good uh, for a strangle? Well, for me, strangles, are we close to the 50 or the 2 or the 21 EMAs here? I think we are. If you're looking at the weekly chart here on SPY, which would be the same as ES as well. You're right at the 50 and the 21 here, and RSI, I would like it between 40 and 60. So RSI is right at 50. Nice. Okay. The weekly is a little bit bullish. The daily starting to run out of momentum a little bit. I think it's a good idea for a strangle in here. So strangles on SPY or ES, I think right now, best trade opportunity out there. But also, if you think the longer term trend is higher, and let's talk about the covered strangle a bit. So what's the difference, in the covered strangle versus really a wheel trade? And for me, it's the covered strangle is how I would prefer to trade the wheel, because you get a lot more income by selling the strangle. And if you get assigned, then we can, depending on your buying power and the size of your account, you could potentially look to put another strangle on, even though, and after being assigned and owning the long shares. Now, Igor in his trade, a little bit different. He will put the strangle on, and then he's going to sell essentially like an at the money put to try to get assigned. I use the strangle as the vehicle for assignment. He's trying to get assigned with a naked put while having a strangle already working. So he's kind of leaving this strangle on, but he's not using it to enter or get called away, because he's been selling at the money puts, or then he'll sell an at the money call in the middle of having a strangle already working. I'm a little bit different. I'm using the strangle as my entry. So if you are bullish on SPY here, and this is not the worst place to be bullish. If this thing came down towards its, 21 or 200 EMA or 200 moving average on the weekly, that's a pretty good spot. And we got doggone close to it before we ran up. We could still roll over, but I would go in a little lighter. So if I can afford to do, let's say, three contracts of SPY or any underlying, I might go in with one of these to start with. So I might go in with one coverage, one strangle to potentially start the whole coverage strangle thing, like I did with TLT, and we can use that as an example. If I sell the strangle on SPY right now, typically with these coverage strangles, you want to stick around 30 to 45 DTE. I'm going to stick around the 30 right now, which would be June 6th. So let's go and take a quick look. Hope this is all making sense. But we're just going to do this on SPY, right? And I'm going to go to the 31 day, which is June 6th, and we're going to put on uh, a strangle that's going to allow us to potentially get assigned on these things. But I'll look, at the charts. The Bollinger Band's down around 505 on the daily, 511 for the 3 ATR. I feel that there's a gap fill down around 530. I feel there's also a support level around 510. So there's a bunch of different areas to go for. I don't think I would base it just on delta, but if I'm going to do this, let's look at like a 14 to 15, 12 to 14 delta on these. Right, so I'm going to sell this 515. So if I get assigned at 515 right now, I'd be pretty comfortable with 515. Okay, on the weekly, that's also the bottom of the Bollinger Band, so it's not a bad spot to be either. But 515 might be where it might be a little too far for some people, and you could actually go closer if you want. But let's just look at how this would play out. 515 on the downside, and then I really don't want to have trouble on the upside, so we can go out a little bit more. Let's just use around this 12 delta, like the 595, somewhere around this range. Okay. Both around 12-ish, 12 to 14 delta. You could even go a little higher um, on this. This is in a PM account, so again, it can all change. But here, this would be the coverage strangle. If I really don't want to get assigned on the upper strike, so you could go a little bit farther away if needed. And then the odds of getting assigned at 515, they're not great. You might want to pull this up if you really are bullish and you want to get assigned. Maybe we go up to like the 20. Um, Here, let's just go to 530. Okay, so 530 is about 30 points down from here. Um, 30 points on 560, it's about 5% down move. That could happen in 2 days, which is why typically I'm not looking at that. But you can move it up a little bit more. Just determine where your support levels are, where you're comfortable being. And right now for me, about 515 on the downside, I think is probably a good spot. But right now it's about 13 delta, but I'm not looking at the delta. We're going to take in $410 on 3,500. This is a 10% return in 30 days. So if nothing happens, we make 10% in 30 days. And, you know, I'm open to assignment. And if you really want assignment, maybe again, you can be a little bit more aggressive. The question, yeah, what happens if the price goes up and you get assigned short? Well, that's the one thing you don't want. So you would have to uh, make some amends here for this. So I'm either A, going to stop out of the trade for a loss before getting assigned, or B, I could roll the calls out. But that's not the purpose here was to get assigned and wheel essentially. So I would stay pretty conservative on the call side, and I do not want to get assigned here. If I need to, I'll close the entire trade for a loss, and we'll do something. We'll do something else on it. So it's a tough thing because you don't want to get assigned on the upside and be short shares, right? So You've got to at least pay attention there. And I'm not a big fan of rolling the untested up because that wasn't the purpose of the trade. I really don't want to roll this out, but we could roll the entire strangle out, or we could try to roll, the untested up and then roll this up as well. But that's a lot of monkeying around, which I really don't want. So I like where we are at this trend line. I like the setup on this. 520, it's 40 points below here. We could easily get a sign. The way Igor's doing it is he will also sell this naked put to take assignment at 560. I'm okay with just making 10%. Okay. But if I get assigned, that's fine. I think you have to look uh, at your naked puts here. The 530 is probably not a bad strike. Again, 30 points below here is not bad. So you could be a little bit more aggressive on the puts. I would not be more aggressive on the calls. Okay. And if you want to roll up even a little bit more to like the expected move here, I think 20 delta is probably not the worst piece here, but let's just use the 530. Okay. We're going to make 600 bucks on 47, 4,700. It's a pretty good return, well over 10%. If we get assigned, great. If I get assigned at 530, I'm going to do the same thing where starting small, let's say let's say this 560 is where we got assigned. I would just do a strangle against this trade to potentially take in more shares or get called away. So now you can be a little bit more aggressive on the upside. Once you get assigned, I can be more aggressive on the upside because now I own the shares. And let's say we got assigned at 560 from something from way back when. Well, now you start to go into covered call mode where you can be a little bit more aggressive. If the markets are really bullish and the goal is just to get out of this thing, then you can be pretty aggressive on the upside here because, hey, we're okay getting called away at maybe a 30 or 40 delta, 30 delta, 40 delta. Let's say the 570. If it goes up 10 points, we get called away. We're going to sell let's say the 525s down here, which would allow us to, if we drop, okay, we're going to take more shares on at 525, which is going to give us closer to an average of like 538 or something would be our average cost now or our average strike. And then we can continue to sell more at the money. You can do whichever either way, but I guess the point here is instead of just taking in this $900 on the calls, okay, I'm also adding another $400 on these puts. So I'm juicing the overall return here, and I do prefer or I do like the covered strangle if I get assigned on something. So hopefully this made some sense to you guys. Find an underlying that you like, that you're willing to hold the shares. Okay, and let's go back to our charts. So where am I looking to hold my shares? I'm going to fix this real quick since Tasty Trade's got all those little black dots. What's an underlying that you like? You can find lots of different underlyings here. I think what concerns me when I start to look at some of these underlyings is you are starting to, get a little extended. So let's keep an eye on where are things headed. Okay. UPRO, maybe. I think, TQQQ, maybe. I like the pullbacks on these and coming into some sort of support levels. Not the worst thing here. The SOXL, and I like, again, these ETFs or some of these 3X leveraged. Okay. Not there yet. TNA, which is small caps, maybe. DPST, which is the regional bank ETF, triple leverage, which I did one on before. I do like this underlying. Okay. We're all getting close to back to the 21 and this uptrend line. Question is, will that hold out there? I don't really love where TMF is. Bitcoin, BITX, maybe. Okay, MicroStrategy, maybe. This is the 2x leveraged version of that. Um, yeah. So whatever floats your boat. Um, let's look at Berkshire the Bees. Okay, Berkshire Hathaway. I like the fact that it's pulled back pretty nicely after earnings. Were earnings great? No, earnings were not great. So it got beat up pretty good. Got sent lower. Now we have an opportunity. If you liked Berkshire, and if we look at the longer term weekly, it's not enough pullback for me probably yet, but it's not a bad spot. So would you want to get into Berkshire lower than this? Well, maybe. What would be a good spot for Berkshire? You know, maybe this 491 area that we hit before. We've kind of held serve a little bit around this 490 area. We did break it one day, but for the most part, this has held up fairly decently. Okay. And I have been looking at Berkshire as well, and not just because of the Warren Buffett um, annual meeting from last week where he's stepping down, but I just think it's an interesting opportunity here. It's below the 21. It's now just below the 50, which is very rare that this thing drops below the 50 for very long. It's nowhere near the 200, but I think we could get it down here at the bottom of these Bollinger Bands, which are seeming to pinch in here. And I think this 490 level is not bad. So if I wanted to do that one, and maybe we'll place a trade. Let's take a quick look. BRKB. Let's go into the trade account. All right. And let's look at what if we did Berkshire. Okay. And the nice thing is if you do some of these on dividend paying stocks, then you'll basically be getting triple income because you can get the price appreciation, you can get the dividend, and then you're going to get the premium from selling covered strangles against it. Let's go out to June 6th, 31 days. 490 was what I said I liked, and I would not mind owning Berkshire maybe at that 490 level. 460, I'm a chicken, so it's hard on these things, but good IV. I don't want to get assigned on the upside, so I'm going to still go out to my normal about 7 or so. 560 puts me well above uh, anything. I probably could pull this in, but it's just a little extra cash. Let's look at 485. 485 puts me just below the 490. 472 is the 200 day, 499. I don't mind 485 on Berkshire. Okay, so this would be the opportunity here to sell 30 days out a strangle. It's a little skewed. I just don't want to get assigned to the upside, but I'm okay. Uh, if the way Igor was doing again, he would be putting this on a little wider here, and then he would turn around and sell just at the money. Well, I don't want it at 510. To me, even though 510 is not a bad spot, I want a little bit more of a discount. But what am I paying for this in a portfolio margin account? Well, I'm getting 516 bucks on 4,400. So 516 on 4,400 is a nice 12% return in 30 days. And if we get assigned, I'm fine with that because I wouldn't mind owning Berkshire at 485. If I had just bought the shares, okay, cost me about 7,600 in margin is what I'm going to be using up for buying power, but also $51,000 is the cash secured level. It's still doable in this account, but it's a little heavier. But if you've got a big enough account, Berkshire, SPY, QQQ, I think this works for pretty much any of those that you want to do. So we could do Berkshire. I think we just did SPY, but if you wanted to do SPY, same thing. We go to 30 days. We take a look at the chart where would we potentially be okay with getting assigned on SPY. And for me on SPY, probably somewhere around 528 to 525, about that 18 to 20 delta. So I think 525 there, and then we can go up uh, to about the 7 delta here. Okay, so here's another one again, making 512 on 4,200 bucks. I mean, any of these I think work fine as long as you can afford to take possession of the underlying. And then I'm going to be aggressive on the call on this. I'm going to be aggressive on the strangle that I put onto it, more at the money or just slightly out of the money on the calls, and a put on that, which would then be the bonus. The bonus when I'm entering is the call side way out here. It gives me an extra buck. Okay, great. Okay, so I make an extra makes an extra $100 on this trade. But once you get assigned, then the put, I'm not looking to add more. But if I do the covered strangle and I start small, I get assigned one. Well, then I can do this again. I might the puts now a little bit more of the bonus because I want to get called away of that. But I start the whole thing with an uncovered strangle. Yes. So when I start with an uncovered, I start with just a strangle. And if I get assigned, okay, I'm a little bit more aggressive on the puts. Okay. Igor is going right in. He's putting the strangle on and then selling the naked put very close to at the money to get assigned. Well, I want a deal. So I want to I'm just a bigger chicken maybe, but I want a deal. So if I was doing this on SPY, that's what I would look at. Let's do the Berkshire one again, and we'll actually. So is this what we agreed on something around here? What if we did the 480, which 485, 60, 450 on it's still over 10% return. 480, but maybe I want this at 485. Let's get a little more aggressive, right outside the expected move. 490 is what I thought was support, so I'm going to go right below it here. If we hit it, great. If not, we're going to make over 10% on this particular trade. All right, so we're going to put that on, and this will be a covered strangle opportunity on Berkshire in here. We'll keep an eye on what happens there. Now, make sure you have the funds in your account. If you don't have the funds to be able to take possession of 100 shares of Berkshire at $500, which is $50,000. If you don't have those funds, then you're going to have to do something smaller. And smaller things would be potentially like mags, which is going to give you something similar to the S&P or the QQQ, really more like QQQ. And I could go down on mags, get something smaller. Support on this thing, probably somewhere around 45 or so is first line of defense. Um, I'm sorry, 43 is the gap fill. So 43 gap fill, 40 in that sense. So not very liquid. It's not my favorite underlying. So I don't know that mags would be the best thing for people to use. But if you want to get assigned on this, where? 43, 43 and a half, 44, maybe 44. And then we go out again on the upside here because we don't really want to get assigned like the 54. Okay. And that would be something we're looking at there. Close to the expected move to the downside, getting a discount. Okay. This still, brings in not quite 10%. This is a hard to borrow stock. You may also take a look at SoFi here. Good quality underlying on SoFi. And we could do this at 30 days. Let's keep moving on this. I don't want to do too many. And then maybe it's SoFi. If I was identifying some support levels, be around the 12-ish, so I could go a little bit below 12. So maybe at the 11s, and then maybe selling something up here around 16 and a half. Okay, this is making $30 on 75. It's a pretty good return, not quite 50%. Return on this thing. I don't know that we're even getting the 16. We could go something like this, which is closer to like a 50% return in 30 days. It's not a bad setup. Would you want to own SoFi at 11? Okay. The low of the years like 9.5, where it stayed for like a week or two, but for the most part, 11's been a pretty good level on SoFi. So if you have conviction on SoFi, you guys all know I'm a fan of Hood as well. So we could do something similar on Hood, and I don't have anything on Hood. So this is an opportunity here on Hood, which I do like a lot as a lower priced stock. I think Hood has some support around 43. I think there's some other support around 40 on Hood. So I think we could go around this 40. And then we'll want to stay away like that 8-ish delta up here. It's just giving us a little bit of a bonus. Hey, $30 here, but $100 here. So we're taking in $138 on 633, which again, not a bad return. I mean, this is a 20% return in 30 days. Okay. And if we got assigned at 40, then I would do the same thing. I would but I would flip it up to do a more at the money call. And then I would do something out of the money. If we got assigned at 40, I might sell like the 35. That way, if it kept falling, we'd own closer to 40. So you start to leg in a little bit more. All right, I hope this makes sense on the covered strangle. Did I answer most questions? But I start with a strangle that's a bit uneven. I'm closer to the expected move and a support level on the puts. I'm out of the money at my normal like 8 delta, low delta on the upside because I just don't want it. It just gives me a little bit of bonus cash. You can look at the charts. 67's the high for the year. Right now, the weekly looks decent. The daily looks a little weak. I mean, if you could pinch it in, but let's just go with this for now. Uh, and if we wanted to do this, you know, 2 shares with, 1 share's like $4,000 of uh, cash secured. 2 shares is going to be like 8. Okay, so we could go like 3 shares of this thing. It's a nice $378 on 1,900. That's a good return overall. So we could do something like that as well. Okay. I'll put it on just for the heck of it so you guys can see what we're doing. So there's 2 covered strangle entries. The same thing applies if I'm going to do credit spreads. So now I want to find a stock that is bullish in nature. We're going to have to go back to our charts. I want to talk about put credit spreads. And to me, from small accounts, this is one of the best strategies I think you can do. So the covered strangle is fine, but it does require some capital because if you get assigned, okay, now you've got to be able to own those shares. So you're going to have to trade within your size. But it's a good short-term strategy. It's essentially the wheel with a little bit more juice to it. Okay, so it's the wheel with juice by selling the strangle versus just the covered call to get in and to get out. Right, and that's how I prefer that particular trade to be handled. All right, so there's my version on the wheel. So what do we like here? Is there anything that we like that looks like a solid uptrend but pulling back? Well, a couple of these are, but I don't know that they're at a. Oh man. All right, so I want to see something where the RSI is a little bit low. So I'm going to cycle through some trades here. TMF, I'm going to stay away from it. Let's keep looking. Amazon, no. RSI is still around the 50s. I'd like to see something under 50 for an RSI on the daily. Hood, no. Palantir, this thing's getting a little juicier. We're not there yet. On Palantir, Google, no. Tesla, maybe. Okay, Meta, I'm just not seeing anything that's giving me oversold after this move vibes yet. So call credit spreads, potentially. Put credit spreads, not really. And I really don't want to go against the grain Here, I'm not finding anything with RSI or stochastic momentum that is under where I would like to be to put on uh, a credit spread. We'll cycle through a few more stocks. I know this is boring for you. Hopefully, we'll find maybe something. All right. No, 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 no. Qualcomm, maybe. Okay, maybe. I would like to see the momentum rising though on this thing. So if I'm doing credit spreads, ideally I would like to see an uptrend, which higher high, higher low, higher high, higher lows. Okay, on Qualcomm, so it does meet that criteria. But I also like to see RSI potentially rising. It's kind of flat and not coming from oversold, but it's not a bad setup. So Qualcomm is not a bad setup for a put credit spread potentially in here. I'd love to see like a little bit more oversold before we do it. Um, no, SMCI maybe. This is It's a volatile stock, but again, the whole purpose here is if you're selling credit spreads, uh, you're defining your risk. I don't know that I'm seeing any momentum to the upside yet, so SMCI, maybe. Nothing, nothing. These all look the same. Everything looks the same. Some of these are well overbought. Snap was one, XOM. We can take a look at XOM. We'll get to that one in a moment. Snap, I did this trade on Snap the other day, so you can see what we're doing on Snap. Let's get down, probably, yeah, when we get to energy trades. Square or Block now, this thing really took a dive. I think it's way overdone. The 3-day rule is in effect, right? So big gap down on earnings, big gap down the day after earnings. 3-day rules in effect. It hasn't gotten worse. In fact, it's gotten a little bit better each day for 3 days. If we're looking at this, we are pretty close to an oversold territory. This thing's not a bad idea for a trade. Okay. We're sitting here, at 45. If we wanted to do XYZ for a trade, I'm probably going to look at like the 30 days out there and then see if I can put something on, ideally 12-ish delta, something like that. And I want to get about 25% or so. Here's a trade setup potentially on XYZ. So if you wanted to do square, we could do, again, the 16 delta. Okay, so we're past the expected move, 42. The low, when it tanked, I mean, it did come down to about 44 and a half before it started to recover here a little bit. It's overdone. I don't think this is that bad of a stock to be beat up this badly. So again, if you look at my trade plan, I'm looking at 12 to 14 delta. I guess I could go lower, 12 to 14 delta. So I'll do 13. And then my width, I want 25% credit to BP if I can. So 21 on 68, that's at least 25% or more. So this is not a bad potential trade setup here. And, let's say we wanted to make $200 or something. 200 bucks using $600 in margin. We have 30 days to stay above 40. And I would normally size these things to, if I took I'd go at a 1.5% loss or 1.5x loss on these types of trades. But we would probably be closer to like $500. I'll take 50% profit, or I'll stop out of this thing at 1.5, which would be $750 loss. So $750 loss or a $250 profit. So basically 2 to 1 or 1 to 3, I should say, ratio. This is not a bad setup for XYZ. Could be an interesting trade opportunity. Okay. We'll see. All right, let's go back. I'm just trying to give you guys setups. I'm actually putting my own money on the line so that you can see some of these trades. All right, paychecks, no, no, no. Coin, no. Clean Spark, no. Not yet, but maybe getting close. Mara, no. And no. Lily, not yet. Merc, no. Because they're not showing me any signs of bottoming and turning up. Things are still falling, falling, falling. All right, XOM, maybe. Okay, it's not a bad, not potentially a bad setup in here either. You're right above the PSAR level. This thing has sold off. RSI is below 50, but starting to climb. Stochastic momentum still falling down, and so is the MACD, but not terribly. So XOM, Matt, is not a bad opportunity either. XOM, if I was going to do a credit spread on this one, we're going to have to wrap up soon. I know I'm going to run out of time, but let's just try to get a few of these things going. If we were going to do this one, again, you go about 30 days out, 30 to 45 days out. I'm going to go down to about 12-ish, 12 to 14 delta. You can go more. I mean, XOM, I think you could be more aggressive here, like the 98. 33 bucks on 128. It's close. $46 on 189. That's a good 2%, a good 25%. So I think this is an opportunity in here in XOM. And 97 would give us, that would hit the lows of the year at 97. So we would have to drop below the expected move, below the lows, which would be the bottom line support. So 97, 94, making 45 bucks on 182. Okay. Gives you 25%. So I like this trade as well. So I think XOM could potentially be something to take a look at here. Size it appropriately for yourself and putting on again some of these smaller size trades uh, that could give you generate some income or some cash in the next couple weeks. All right, so hopefully that was helpful on covered strangles. We covered a bit on credit spreads here. Overall, I'm using the exact same criteria if you want to get long. I'm not saying anything I really want to get long on, but there's a difference between selling premium and then buying something that you think is going to continue to move up. So let's do one more thing here on how I would buy long on something. And that would be something moving from lower to higher. Here's, Celsius, no, way too far up. IBIT also is a pretty interesting trade in here. It is breaking this trend line. So now we're really looking for potential support and resistance areas. Previous pivot level back here, pivot high. That's exactly where we are today. I think I'd like to see if we bounce off of this level tomorrow on IBIT. I think that would be a good opportunity. Not a great setup yet. MicroStrategy, not great yet. So I'm not finding a whole lot that I love in here that might be moving higher. Everything right now is rolling over a bit on the daily. And I want to find something where the MAC or the RSI is rising and stochastic momentum is actually rising and they're not overdone yet. And really not finding much of those. If we can find one quick one that didn't set up as a spread, because spreads, I want something that's oversold, that's reversing. Buying long, I want something that's got some momentum that's rocketing higher. Chipotle, I just don't believe in Chipotle. Hims is a possibility here. This thing is getting into overbought territory on the daily, But here on the weekly, I think this thing's just starting to get going. I think Hims is a good potential for getting long. I really like Hims as a potential company to invest in. I didn't see much of anything here, so we'll hold off on that till the next time. Simply because, oh, you know what? Gold's a here's a good one. Let's just look at gold futures. So gold futures oversold, starting to rise. MACD's reversing higher, RSI is running higher, stochastic momentum. This looks really, really good. Okay. It looks pretty good. It's a little overdone on the weekly, okay, but the daily looks pretty good. How would I do this if I was just buying shares? Do a quick one here before we jump on this meeting. And let's take a look at gold. Now, we do have a 112 in gold that's up 25% up. That's great. Our oils are doing fine. But if we wanted to go along here, I would probably look at something shorter term. Let's look at like 15 days. Okay, you could do 30, but let's look at 15 days. And I'm gonna go, these are expensive, man. This thing is expensive. I don't like it. I'm probably going to go somewhere around the 40 delta long. So if I was buying it, and gold's just not a good example. You know what is a good example? Let's look at GLD. So if we were going to do GLD, same thing, and I wanted to buy into something here. Well, geez. I'd probably again go around this 40-ish long, and this is what I would buy. So I'd probably buy slightly out of the money, around 40 delta longs at 319. Now, again, the problem with buying, which I don't love, is you have to be right on direction, you have to be right on timing, and you have to be uh, right on a bunch of things. So I've got to get the direction right. Well, the direction looks good, but I don't know. 319 on GLD, and what are we at on GLD right now? We're at 314, so we still have to go 5 points up, and not only do I have to go 5 points up, but I have to go an extra 4 points up because of the premium I'm paying. It's a lot of money to spend on this. I think the extrinsic's a little too high. IVR is way too high. But hopefully you get the point. If we were doing it on that HIMS, not that I would pull the trigger on this thing yet, but maybe around 17. So if I was doing it here, maybe I would be buying something around this 50 on it. Doesn't the probability of profit? No, the probability of profit uh, doesn't really bother me when I'm long a trade. So it's really more important when you're selling premium, but not when you're buying. So when you're buying premium, the goal here is when you buy leaps versus selling leaps, when you buy stocks versus selling stocks, okay, your upside is significant. I mean, if this thing moves on HIMS, and let me, one more thing on HIMS. I'm going to have to wrap up here, but on HIMS, the upside, well, we're at the top of the Bollinger Band, but if this thing ran to 56 to 60, okay, then you're going to make on this thing running to 50, let's just say it goes to 55, okay, in the next 3 weeks. If this thing goes to 55 in 3 weeks, then we're going to have made $9 minus the 3 of premium. That's going to be $6 on something that cost me 3. That's going to be a 200% return. So I'm looking to make 100 to 200%. And if I need to, I'll cut this thing at maybe a 50% loss, or I'll just take the whole loss. But I could make $600 if it goes where I think it's going to go. Here, I could make $600 on 300. That's a 200% return. It's a big difference between selling premium and buying premium. Uh, I'm not really worried about the probability of profit on these. because I'm looking at strictly technicals and seeing a strong move higher. Anyway, that's why I don't love buying longs, but we will do it on occasion in here. I've got one right now on Google. This is a longer term one. We've already been in this for a week, a little over a week. I bought the 165s for for $5. Okay. So I need this thing. I bought the 165s for $5. I need this thing to go to about 171 on Google in 45 days. Okay. Because A, I'm going to lose the extrinsic. So I've got to get there. I've got to be right on direction and I have to be right on time. And I have to be right on size of the move as well. So I not only do I have to be right on direction, I have to be right on time, and I have to be right on magnitude. It's not easy to do that. We are up 8%. We're up 50%, $50 on this Google trade. But you can see Amazon is going the other way. So Amazon just sucks right now. So not a great trade. All right, that's it. I'm going to wrap up with you guys here. I hope this was helpful, giving you some ideas on some shorter term trades. We'll see if we get filled on anything. We did the Berkshire one. We got filled on a hood trade. I don't know if I'll keep all of these other ones on. I don't want to get too carried away and crazy. So hopefully this was helpful and you got something out of this one. And we'll see you guys back in the Discord. See ya.